Hey guys, it's Mrs. Lamphere. We are in Unit 4, Section 8 of Accounting, so we are trekking right along here. Okay, so previously we talked about how we have our permanent accounts, which are asset, liability, and owner's equity account. Owner's equity accounts. Those are our permanent accounts, meaning that the balance of those accounts at the end of the year will carry over into the beginning of the following year. And then we also talked about our temporary accounts, our revenue, expenses, and withdrawal accounts. Those are our temporary accounts. And we mentioned that at the end of the accounting period, we need to close those accounts out, meaning we need to get them to have a zero balance because those are only temporary accounts. Their balances do not carry over. So, and I mentioned we take those balances and they ultimately affect our owner's equity account. And so now these closing entries that we're going to talk about discuss kind of the process of closing out those temporary accounts and transferring those balances over to our owner's equity, okay? Because there are a couple steps involved. So this first video, we're going to talk through the process of posting closing entries. Okay, so let's just kind of skim through this text here. So obviously the ultimate aim of every business is going to be to earn a profit. This can be revealed by preparing an income summary account. Okay, so this is the new account name that we're going to focus on today. And I promise it's the last one we're going to throw at you. So the income summary is another type of account. And what it does is summarizes the revenue and expenses, summarizes revenue and expenses only for an accounting period and is only used at the end of the accounting period. So throughout the year, this might kind of trigger a memory. The other thing that we use revenue and expenses for is to prepare what? Financial statement. I'll give you a second. Yes, the income statement. Okay, so the income statement is the document we can create however often we want to find whether or not our company's earning a profit or a loss. But so the income summary now summarizes the revenue and expense accounts for the accounting period and should only be produced at the end of the accounting period. So the income summary is what we're going to use to help us close out those revenue and expense accounts. Notice I'm not including withdrawal. We're just closing out revenue and expenses to income summary. And if you have your handy dandy reference guide, you'll notice that so my expense account, to close this account, the balance will be transferred to income summary. Revenue account, the balance will be transferred to income summary. I actually incorrectly made that PDF that I sent to you, so I'm going to be sending out this new one to you. So, expense account will be closed to income summary, revenue account will be closed to income summary, and the withdrawal account gets transferred directly to owner's equity. So we're using income summary first to summarize our revenue and expense by closing those out with income summary and then transferring that balance to owner's equity. Whereas the withdrawal account, the balance goes directly to owner's equity. So we don't include the withdrawal account in that income summary account. Okay, so the next step in the closing process is to post the closing entries to the general ledger. So once we record these, so we're going to have to make journal entries for closing out our revenue and expense accounts and our withdrawal account. And then we'll need to post those journal entries to the general ledger. Okay, let's see. The posting procedure is the same as for any general journal entry with one exception. The words closing entry are written in the description column of the general ledger account. So instead of saying what I think before we said the account names that or the source document, this is just going to be recorded as closing entry in the description column of the general ledger. Okay, so let's take a look at, let's take a closer look then at this income summary account because it's kind of confusing. So I know before we've been focusing on with our different account types, we've been looking at, okay, which side increases, which side decreases, and a debit increases for an asset and a credit increases for the liabilities. So with an income summary, though, there is no increase or decrease side. Okay, it still has a debit and a credit side, but with income summary, there's really no increase decrease, and we'll kind of demonstrate that here in a minute. So the income summary account summarizes the revenues and expenses for the accounting period. This is the income statement in the ledger. Okay, the income summary is used only at the end of the accounting period, so we've said all this. Okay, here's something important. At the beginning of the closing process, the income summary has no balance. So when we first start with the income summary, there is no balance. And then during the closing process, we'll transfer balances over to it. So it's going to be debited and credited for different amounts from the revenue and expense accounts. And then at the end of the closing process, it will again have no balance. So we are going to open this income summary with no balance, transfer some balances over from revenue and expense. Then we're going to transfer those balances back out so that there is no balance in the income summary. Okay, because the income summary clears the balances of the revenue and expense accounts, it's sometimes called a clearing account. It could also be called a revenue and expense summary, profit and loss summary, or income and expense account. Okay, none of that's real important. We're just going to call it the income summary. Okay, so some important characteristics of the income summary. It is different from other temporary accounts, but that's the thing. It is a temporary account that we are simply just opening temporarily to close our revenue and expense accounts. It is only used at the end of the accounting period. It does not have a normal balance because there is no increase or decrease side. The balance in the income summary account before and after the closing process is 0. And the income summary does not include any financial statement. So again, this is just a temporary account that we open briefly to close our revenue and expense accounts. Okay, with preparing closing entries, we're going to follow these steps. Transfer the balances of all revenue to the credit side of the income summary. Transfer the balances of the expense to the debit side of the income summary. And then we're going to transfer the balance of the income summary to the capital account. So whether it's net income or net loss, we'll be able to tell on our income summary. Okay, so with this video, I just wanted to kind of talk about the income summary account. And so in the next video, we're actually going to demonstrate then how to close these accounts to income summary.